So welcome everyone, and good evening. My name is Wendy Ninomiya, and I am the community manager and one of the creative designer of ShibuLA Ventures. And thank you all for participating to our free webinar, First Steps to Your Venture Journey. Next, please. So today's agenda, we're going to make it short. We're going to do a short introduction of ShibuLA Ventures, talk about the basics of venture and the difference between a venture company and startup, and importances of what ventures are, doing some examples, and at the end we will have a 10-minute Q&A session. So feel free to ask any questions during that Q&A session. Next, please. So housekeeping and norm settings. Please refrain from taking screenshots or recording from your device. We are recording this session and will be posted on our YouTube channel in the next few days. We will stop recording before we head into the Q&A session, and we encourage everyone to ask questions freely as a safe space. And feel free to write questions in the chat in the meantime, so we can put them in the Q&A queue. And presentation materials for this webinar will not be distributed. But if you could fill out the survey after the webinar, you will have a choice to decide whether to receive a free ebook by the end of August that will contain similar contents. And any opinion and interpretation expressed during this webinar is the opinion/statement of the presenter, and they do not reflect the opinion of any of cited authors or their organizations. A small disclaimer here. Our presenter for today, Kevin, is licensed as an attorney, but please note that today's seminar should not be construed as a legal advice of any kind, and ShibuLA Ventures is not endorsing any legal-related service by any individual lawyer or law firm. ShibuLA Ventures is not a legal services firm nor a referral service. If you run into legal issues or questions related to your business idea, we encourage you to seek legal advice from your own choice of legal experts. So I know some of you are wondering why ShibuLA? Why is it named ShibuLA? We named our firm ShibuLA because we are actually, we have an office in Los Angeles, and we're thinking of having an office in Shibuya, Tokyo. And we combined these two names and we came up with ShibuLA. So a little introduction about ShibuLA Ventures. We are an operator turned consultant with a mission to vitalize regional economies via a global network. And some highlighted works we have are advisory for fundraising and business architecting for a US ad tech startup. Another one is venture building with an Okinawan musician entrepreneur. And another one is regional development planning for a community group in Japan's emerging region with respect to ag tech. So further, I will be passing it on to our presenter, Kevin Ninomiya, please.
Very cool. Thanks, Wendy. So I'll keep my introduction short. Probably the most important part is that my hobbies include wines and cooking. I'm the founder of this ShibuLA Ventures. At the same time, I am also a licensed attorney in California, Minnesota, and USPTO. Have an engineering background, bilingual, have some connections in several places just because I've lived there or worked there in the past. I think the most important takeaway from this is that I have several venture building experiences that are technology based in the hardware technology, as well as some level of expertise in the biomanufacturing nowadays. I do have some affiliation with a reputable accelerator called Berkeley SkyDeck. I recently became one of their SkyDeck advisors, which has been a great experience. And so all these experiences will culminate in me having some exposure into basically the startup world. So I'm going to start off by sort of defining what are the type of venture companies out there. people basically talk about, I want to start my own company. That's great. It's a great journey that you're about to embark on. But there are different types. Simply said, many folks use the word startup, and that's basically defined with venture-backed financing. There are pros and cons for every one of these. I'm going to focus more or less on the startups for today, but there are other venture companies out there as well. One of them being self-owned businesses where it's 100% owned by the co-founders. Another one being family-owned businesses where particular businesses owned only by family members or their relatives, perhaps. And there are still privately held, but basically a joint venture between existing companies or simply 100% subsidiary of a company. So for today, I'll just kind of dive a little bit deeper into this venture-backed startup group. So first off, I just want to make sure that we're on the same page with regards to definition. There's a venture company versus startup. A startup company is just one type of a venture company, as I mentioned a little earlier. And basically, a startup company is a venture company, but a venture company is not a startup company. So this is actually because of the whole venture-backed finance aspect. Startup companies tend to be invested by outside investors, not just the founders themselves. And what that means is that actually founders of a venture-backed startup tends to start to lose their control over their own company. That's because of this whole dynamic surrounding equity holdings. So kind of here on the left-hand side, I put this paragraph, or I should say just statement, saying equity holding share is inversely proportional to equity value for a given founder. So assume that, your startup, for example, that you start, it's going to go well in 3-5 years, maybe even 7-10 years, where the startup is going to exit at some point, hopefully. By then, you've probably gone through several fundraising rounds, seed, angel, series A, B. You probably heard some of these terms. I can go into a little bit more details during the Q&A. But basically, every time there's a fundraising round, the amount of startup equity that a founder holds dilutes. That's a technical term, dilution. And dilution basically just means, let's suppose you have 50% of your startup ownership that goes down to, let's say, 30%, 20%, 10%, et cetera, as your startup grows and as you increase the amount of investors and therefore the amount of investment that you have in order to basically put into your company. So really, for any of you who are aspiring founders, you may not be thinking about a startup just yet, but for those who are, maybe even a little bit of, getting your foot wet a little bit, I would encourage you to ask yourself this: does my venture or business idea really require or benefit from outside investments? And that's because of what I just said. It basically costs you the control over your company. But some companies are required to get outside investment, and namely a lot of these R&D heavy or capital heavy type of companies. So that kind of brings me to this very last statement on this page, which is, at this stage, the mechanics and the structures, it's important to sort of know about them, but really the most important part is having an idea, whether your idea is actually capturing your audience's attention. So from here on, I'm going to go through a little bit of this ideation type of process, coming up with an idea, refining it, honing it, making sure that your idea is actually capturing your audience's attention and some concepts surrounding that. I'm not going to go into too much details of a single concept for today because it's a fairly high-level 101 type of webinar. So it's a bit difficult to just tailor it to a single case, but I will go over a single example, a very simple example at the end of this webinar as well, just for your sake. So I would like to start off with just explaining this slide here. It's adapted from this concept of double diamond product design process. It's by a gentleman named Peter, and it's been cited in various places. I actually personally like it because I actually think from a startup, venture world type of perspective, this is kind of the core part of a business development lifecycle. And I've been in the business development uh, world, if you will, for startups or for innovation for the last few years. And I actually think this works out pretty nicely. And really kind of breaks down to this definition phase and the execution phase. More simply put, the why and the how is on the first half, and the what and how, basically a more specific how on the execution, the second half. You Some of you may have heard the term problem solution fit, product market fit. Those words are not written on here, but they basically mean the same thing. You kind of see this box plan. I think my personal opinion is you probably replace this plan word with problem solution fit. And then this word ship, you can probably replace it with product market fit. I'll go into a little bit more details about that. But firstly, I like to go over some concepts that you've probably heard either through even high school these days, or maybe even in some of your 101 design or engineering or even business classes, in case you've already taken them at universities or community colleges. So it's basically on the first half. And that's design thinking. Design thinking is essentially this iterative cycle, right? Where you try to capture what the current needs are from your target audience. I'll just kind of go over that in case any of you are not familiar with design thinking at first, but I written down the highlights here. So again, it's really trying to understand the current needs of users, of stakeholders. And there's a little bit of a difference between a B2C business model versus a B2B business model. But for today's sake, we'll keep it pretty simple, and we'll use a B2C type of business model. So the pros of a design thinking is that you do actually get a decent grasp of the current needs. At the same time, you do have to sort of understand that these are based on historical data. So if you are working or thinking about a business idea in an industry or sector where trends tend to change very dynamically or quickly, you have to be on your toes all the time. Or perhaps it's, maybe it's just not the right fit of entrepreneurial fit, if you will. But trying to do design thinking and trying to come up with a prototype, a mock-up design, for example, is fairly low cost these days. You can use a lot of these subscription-based tools online. Some of them are even free for, the first few days, for example, or there's a free plan, which is pretty bare bone, but still pretty good. And basically, if, you follow this approach of lean methods, you kind of achieve design thinking based solutions. But there are always cons to attach with this. Cons could include much of this is going to be focused on the current needs. Again, this is a feedback-based approach. So by the time you come up with a decent solution, remember, depending on your sector, your consumer trends may already be shifting to something else. So just keep that in mind. And even if it is a long lead time type of sector, you might still lose sight of the mid and long-term objectives. So that's also something to keep in mind as well. And it does tend to focus on single audience, single target audience with the largest common denominator. So it's rather fairly narrow-minded, in my personal opinion. The concept on the right-hand side is actually, it's called future thinking. It's become a bit more common these days because many innovators started to realize that design thinking by itself is just not sufficient to come up with a sustainable business. I'm using the word sustainable here, not in the terms of like green, but rather just a long-term that, a company that can last a long time. But basically it is a sort of adaptation from design thinking. It's basically where a future vision is added to the design thinking, so that founders are enabled to backcast from a particular ideal situation in the future, and create a roadmap, a predictable roadmap with also a moderate level of risk management capabilities. Me coming from this whole like lawyer risk management type of background, is so important to come up with risk management plans and contingency plans, because whenever you try to pivot as a founder in a startup in a new company, you're gonna have to always sort of do a back and forth of whether your particular decision is going to create a particular value, but also a particular risk. So that's also something that anyone who's thinking of starting a company should keep in mind. And also, for those of you who might be trying to cater to a large company, for example, with a lot of stakeholders, there's going to be a lot of change management resources and costs involved. So that's also something to keep in mind in case you're thinking of kind of working towards a big player customer, like in a B2B situation versus a B2C situation where you're trying to work with consumers who likely do tend to sort of be more progressive in their mindsets towards products that they buy. And then some cons here as well. But I'm just, for the sake of time, I'm going to sort of skip this and go to this next slide, because it basically shows the same thing with this added concept called benefit-based thinking. So it's essentially just a build on or add on to this future thinking, but it is a concept where it allows a founder to sort of widen their scope a little bit instead of just targeting to a single audience. So yes, you will still initially focus on a particular target audience, because as a business person, everyone wants some profit, right? So you want to try to focus, okay, which target audience is the most optimal? But based on future thinking, you already have what's going to be an ideal future for your product, for your company, and for the stakeholders that you're trying to cater towards. But at the same time, if you consider other stakeholders involved, maybe a larger community that can benefit from your product, it could potentially open your product up to a new market. So it's this idea of trying to enable you to tap into additional target audiences, and also sort of get on the mega trend of providing some positive impacts to the world. You probably heard the term environmental, social, and governance, so ESG. Those are it's becoming much more important. In fact, I attended a seminar attended by other prominent VCs, venture capitalists, and some of them they said they would not invest in a company who does not have an ESG plan for their company, whether it's a short term or middle long term. So that's also something to keep in mind in case you're trying to get some venture financing for your company in the future. Secondly, how am I doing on time here? Okay. Secondly, the second half, if you will, of this overall business development life cycle, is this idea of getting to product market fit, basically. And getting to product market fit, and not just getting to it, but with a good alignment, is very important. And here's a statistic in case you need some numbers for some convincing. Nearly 35% of startups tended to fail because their PMF was just not achieved against the actual market needs. And this number is coming from a company called CB Insights, and that was also cited by other articles on Medium and others too. But basically, you can have a thesis of a potential solution, but until you actually build the product, and I'm not just talking about a prototype, but something close to market, something close to commercialization, and you get some feedback from real customers through like a beta launch, you're really not going to be able to figure out what is the right product, how to launch it, how to operate it, and really how to support customers in case your product requires quite a bit of customer support. So this slide is basically just talking about that. And to get to that, there's this thing called plan, do, check, and act cycle. We call it the PDCA cycle in a continuous improvement process that gets thrown around quite a bit in manufacturing companies, but even for software companies these days too, I believe they use this term PDCA quite often. So the idea here is you try to go through multiple iterations of this PDCA cycle, graphical depictions on the right-hand side here, where after you get some type of product thesis, you plan on how to build it, you basically actually build it. And again, not just prototype, but do a little bit of iterations on top of that. And then you check it, get some feedback from your customers, and then you try to implement it. But if the implementation doesn't go very, very nicely, then you fine tune it until you feel like it's ready to basically go to market. So yeah, all of this is very, very important in my mind in order to actually make your business successful. So let's go through an example. And I kept it very simple, and it's a hypothetical example. So please bear with me here that I did not do any factual research. But let's take my shark themed shirt. I don't know if you can notice this, but this is shark themed. For example, on the definition, the first half side, and just going through this design thinking, future thinking, and benefit-based thinking approach here. Through the design thinking process, if I was the manufacturer of this shark themed shirt, I would have done quite a bit of market research, user interviews, surveys. Some survey tools out there are pretty useful. For example, Pollfish, in order to really understand what the user's needs are for a brand new themed shirt. And so users' needs, I was able to get that it is a marine, they want some marine animal design in order to increase higher awareness for marine animal preservation, for example. But just building a shirt based on current needs is, I mean, for your business, it's probably not going to be very sustainable. So my idea here is, well, what do I want to do with this shark themed shirt? Keep in mind that I don't know whether it's a button up or a t-shirt as of yet. With a shark themed shirt, is it possible for me to collaborate with, let's say, an ocean inspired theme park in the future? Maybe that's in 2 years, maybe that's in 3-5 years. I'm not sure, but I want to get to that point. And so basically I come up with some roadmaps. Okay, well, first, who do I sell to? How do I sell it? And in 5 years, I want to sell it in, let's say, SeaWorld. I know that's probably the first ocean-inspired theme park that comes up in my mind. So to get noticed by SeaWorld, in order for me to get a permit or get a contract to basically sell it with their SeaWorld brand on it, I probably need to get noticed, right? I probably need some reputation behind my brand. So that's kind of where future thinking allows you to do. And let's take another step, one more step forward, is the benefit-based thinking solution. Can we collaborate with a marine life preservation nonprofit? Now, here's the thing. Yeah, just doing something good to the world, that's great, but maybe it's not going to make a lot of money. Not necessarily true. As I mentioned earlier, with the benefit-based thinking, it kind of opens up your perspective so that you could try to target new audiences. By us being able to collaborate with a marine life preservation nonprofit, we're not just targeting theme park visitors now. We're actually targeting potentially educators, students at K through 12 maybe. And I think we all know how many K through 12 students are actually in the United States just by itself. It's a lot, far more than the number of theme park visitors at a single theme park. So that's the sort of idea behind this benefit-based thinking is it's not just about doing something good or just providing positive impact. It's opening up potential business opportunities in other markets. So kind of, let's say we're done with the definition aspect. We got problem solution fit, and we're kind of heading into this execution stage. Again, the idea here is to do multiple PDCA cycles at a low cost, in order to try to understand what first product is basically the way to go to market. So in my PDCA one, let's say I prototype a t-shirt. The t-shirt is, let's say it's 100% cotton with a shark design. Cool. It was probably cheap to make because it's a t-shirt and it's 100% cotton. But it's probably also going to be hard to increase value because it is just a simple t-shirt. I mean, unless I have like a super strong brand behind me, it's going to be hard. I don't know, Gucci or something. And it's likely going to be super hot. So, I look at it, I get some feedback from customer. I go through the PDCA 2 cycle. There, I may have gotten some feedback that maybe it's better to build a button-up shirt with a single large shark design. Button-up shirts are probably a bit more expensive to prototype, but it's still easy to wear. It may still be hot, but probably a single shark might be a bit scary. I'm not sure. I get kind of scared seeing a single shark. But based on feedback, I go through another cycle. And then after the third cycle, where I prototyped a linen-based buttoned-up shirt with multiple small sharks swimming around, kind of like this one, it's probably not too hot. I could probably wear this in Florida or, somewhere in the East Coast where it's super humid and hot in the summer. But it's probably also cute. This looks kind of cute compared to probably a large shark that looks like it's about to bite someone. So that's the kind of mindset to go through in order to basically build a product. And hopefully that product is not just a single one-off product, but based on this future thinking and benefit-based thinking, it'll allow you to make it into a sustainable business. So cool. I actually finished pretty early, but yeah, some announcements here. Please consider filling out our online survey from the QR code below, and also following us on social media. We do plan to provide a free ebook. It's not going to be super long, but it's basically just kind of summarizing what we talked about today and going through a little bit more concepts, so that maybe you can talk about or just kind of think through a potential business idea that you might have by the end of August. If you do, sign up through, I think it was one of the last questions on the survey. So yeah, QR codes for LinkedIn, Instagram, and the website's also there too, in case you're interested. So yeah, thank you.